This is Morning Stock Watch with the weekly market report for the week ending April 17th, 2020. This report includes the broad market sectors, large movers for this week, Boeing, Netflix, and Tesla. Starting with the S&P 500 ETF, SPY, weekly closing price 286.64, up just over 3% from the close of last week. Looking at the weekly chart of SPY, we see a moderately sized green candle closing just at the 100 weekly moving average, with a very small wick piercing through it. This candle shows strong buying at the support area right here, as we can see with this wick. This continues to resemble an ascending wedge pattern that points into around the $300 zone, as we can see right here. At the tip of this wedge is exactly $300. Also on the weekly chart, as price continues to move towards $300, we are at the same time building negative divergence on volume right here, as well as showing signs of weakness in a few of the recent weekly candles, where a few of the candle body sizes do not have matching volume, as we can see here. Also on the weekly chart, notice the long red breakdown candle. Its closing price is around 296. This is a good area of resistance that price may have trouble as well. So we have 296 to 300 as a resistance zone to look out for on this chart if we have more upside from here. And lastly, on the hourly chart of SPY, we have a strong instance of bullish continuation, as we can see with these lines right here. This got us a strong move back up to resistance, only to be rejected and continue inside the wedge for the time being. Looking at the 11 market sector ETFs, simply looking at the weekly candles in comparison with the S&P, this week was a mixed bag. Healthcare, consumer staples, and tech trading all above their moving averages. All-time highs for healthcare and consumer staples are just around the corner if they can make it. Financials being the anchor for this week, along with real estate, materials, utilities, and industrials. Most of the charts show a bit of weakness with negative divergence between price and volume. Healthcare, we can see a gap from the week ending February 24th, which has practically been filled. Makes me think, what if the market is eventually going to follow suit? Now let's look a bit closer and see where the S&P can actually be going. As always, there's two sides to every trade. The idea is to be on the good side of the trade more times than not, with each trade having limited risk. With that said, let's see where this thing can go. Last week, we said there was a lot of evidence that price could start setting up for downside, and that's even more the case this week, just longer negative divergent lines as we see here. On the daily chart again, we have a lot of dojis and hanging min candles with decreasing volume, as well as daily volume that doesn't measure up to the candle spreads. 300 is a major target, as several analyses point to the $296 to $300 area. If the market decides not to come down immediately after those targets, it could perhaps move sideways at this area before a gap fill up to 323. Hey, it can happen. Downside targets are to be watched as well. Next on the list is Tesla, weekly close 753.89. Not too long for this one. Looking at a daily chart, we can see that price rode just above the strong trend support that's seen here, and eventually made a nice recovery at the 200 moving average, erasing much of the losses it took in mid-March. The least I can say about this is price does not look stable at all, with price and volume inconsistencies with the last 5 candles, as can be seen here. Appears to be setting up for some different type of price action within the next few daily candles. On the flip side, it can potentially fill a gap up to around 850, as we notice this long breakdown candle here. Also, if you put a little effort, you can come up with this pattern. Points right to 850 on the dot. Will it make it here? Don't know, but it's definitely a clear, solid upside number for right now. Next on the list is Netflix, weekly close 422.96. We've been watching Netflix for a move above 385, and it finally happened with the big move last week. Closed the week at all-time highs. Daily chart looks interesting. We have a high volume breakout with a run-up to trendline resistance shown here, right at 450. And there is a support line right around $394, $400. Some very slight bearish divergence on the day might bring it down, but things look bullish above 385 for now. I'd be expecting growing prices for Netflix. And lastly, we have Boeing, weekly close $154.00. up about 1% from last week's close. On the weekly chart, there are no divergences between price and volume on the indicators, so I'm only looking at the price candles and volume. The pattern shows a large amount of volume during the past 5 weeks compared to the 4 weeks before that. These past 5 weeks, Boeing managed to have a strong bounce with very high amounts of volume, but still not able to make it past the resistance at 185. And right here, notice these upper wicks. This is selling. The past week ended as a high volume hanging man candle, which could send it to the downside, especially if next week ends as a shooting star candle, which would look something like this. On the daily chart, there is a strong trend line that price rode along all this week right here. This is similar to what Tesla did the past couple weeks before making higher moves. On the 15th, price had a nice buying off of support, and now price looks primed for some upside. Upside targets are around 185 and at most 225. Downside targets at 120 and 105 still remain. If these targets are reached, then another study will be needed to determine the next price move. If you found this report useful in any way, please give a like and subscribe. Thanks for watching. See you next week for another weekly report.